the second aspect of this training, which is the rundown of the slide. So let me share the training slide with us. So these are the recordings. I'm just trying to convert them. Okay, so okay, can you guys see my screen?
Yes, sir.
Yes.
Okay, can you see this?
Yes.
Right.
Also.
The basics of Forex.
Yes.
All right, so now let us look at this basic aspect of Forex. I know some of us already know this. Of course, we already know what Forex is all about. But let me just assume we don't know. Then I will go through it again. So Forex simply means simultaneous buying and selling. Simultaneous buying and selling of foreign currencies. Simultaneous means you're doing two things at a time. You're doing two things at a time. So just like Euro USD, there is a slash here, Euro slash US dollar. So when you are buying this, you are selling this. When you are selling this, you are buying this. So this becomes the base currency and this is the quote. So when we say simultaneous, it means you are buying and you're selling at the same time, doing two things at a time. So that is the definition of Forex. That's the basic definition of Forex. That's the basic definition of Forex. Now the next thing we will need to look at for is the Forex market. The Forex market, guys, I'm just, this slide was prepared based on Forex. But the beauty of the whole thing is that if you understand how Forex works, you understand price actions and candlestick patterns in Forex, binary option will not be a problem. It's the same thing, the same chart, the same structure. So once you understand structure is structure anywhere. Once you understand chart, you can trade any pair, you can trade on any chart, on any platform. So that's the beauty of the stuff. So the Forex market opens on Sunday by 10 p.m. and closes on Friday by 10 p.m. For the binary option market, the binary market does not close. It is open 24/7. So the binary option market is open 24/7. So that means if you are trading the binary, because we are focusing on binary now, because there is huge money in binary, and in binary with a small amount, $50, $30, you can grow it in a no distance time and make a very big amount of money from it. So, but in Forex, making that kind of money is difficult and usually a serious task, and there is high manipulation in that in Forex. So that's why we're advising people to focus on binary option. So the binary option market does not close on Saturday. We trade on Sunday. We trade, but for the Forex market, we don't trade on Saturday. We don't trade on Sunday except when the market opens by 10 p.m. Now, the key participants in the forex market are the financial institutions. Financial institutions like banks, central banks, world central banks like Central Bank of China, Central Bank of UK, Central Bank of US, Central Bank of Germany. Then we also have brokers, we have speculators, we have traders like you and I in the forex market. So the forex market is made up of these people that I've just mentioned in the forex market. The participants are those people I just mentioned, financial institutions and all of that. The forex market is affected by macroeconomic data. Now, before I go into this, guys, there's something I would like you to know. Whether the forex market or the binary option market, just know that the market is not running. So don't be in a hurry. The market is always there. The market is always there. You don't need to rush. You don't need to say, hey, people want to finish the money. Hey, they want to do this. No. The market is always there. Relax yourself. If you have a strategy that you are applying, wait for that strategy to work out for you. If you have a particular signal that you're using, let's say divergence or double top or double bottom, you stick to that signal. If that signal is not there, don't trade. If you check Euro USD and that signal is not there, leave it. Go to GBP US dollar. If it is not there, go to USD JPY. If the opportunity you're looking for is not there, leave it. Relax. The market is there. It's not running. It's not running. So what is making people to make losses is that they rush into the market. They rush into the market without any opportunity, without any signal. So that's why they lose. They don't have patience. So one, patience is a key. It's a key quality that you need to trade forex, and you'll be in the market for a long time. While others are running, while others are losing, once you have patience and once you stick to your rules and principles and instructions, when you follow instructions, you last in the market. Do not blow your account. Okay, so that's one of the advice I want to give to you. And another thing is, don't look at this forex or binary market as a quick rich venture. Don't say, I want to make millions. No, I want to make millions. No. Then before you know, if that is your mindset, please, you need to cancel it. That's your mindset. You need to cancel it. The forex market or binary option market is not something that you say, I want to make it. No. I want to do this. No. No. Don't do that. Just take it easy. Take it easy. Gradual. Don't rush. The market is there. It's not running. So have this mindset when you're trading forex or binary option market. Binary option is all about indices, trading of indices, which is not currency. But forex market is all about trading currencies, foreign currencies. All right, so the forex market is affected by macroeconomic data like unemployment rate, political conflict, natural disasters. Now, if we discover that in the UK there is tsunami, if there is tsunami in the UK, it will affect the economy of the country. It will affect the currency pair. It will affect the currency. So when you see something like that, you don't need to trade in that currency. That's the Great Britain pound. You don't need to. You need to avoid it. But in the binary option market, this scenario, these things does not. Nothing like this in the binary. Yeah, there's nothing like this in the binary. It is not driven by anything. It is not driven by news. Like if you're trading forex, you'll be scared of news and all of that. But if you're trading binary option, you don't need to be scared of news. Once you see your structure, you enter And guys, with the 5 strategies that I've developed and I've given to the group we are using, once you stick to any of them, either 1 or 2, and build on it, you make serious profit from it. You make serious profit from it. So those strategies, you don't need to say I must know all or I want to use all. You understand? So once you're able to master 1 or 2 and stick to that 1 or 2, all of them play out very well, provided you follow the instructions and the rules. So it's not enough showing people a binary option or showing people this is what you do, this is what you need to give them strategies to use to make profit. These strategies are strategies that I have been using, and I don't want to be selfish. I decided to share it out so that everybody can have it and use it and be making money. If you go to some other places to learn Forex and all of this, they will not give you these strategies. They will not. They will not. All right, so guys, in the Forex market, we have these issues. This is an issue. It's an issue. But in binary, there is nothing like this. All right, so liquidity is a major advantage. So both in Forex and in binary. So liquidity means you can enter a trade now. If you're making a little profit, you can take it and go away. Or you are making losses and maybe you check the market and you discover that your setup or your analysis was wrong. You can quickly end the call, cut the losses and leave the market. So it's an advantage. You can come in, you can go out. You can come in, you can take small profit, you can take small loss and go out. It's not like Bet Niger that you need to wait until the football match will end. It's not like MMM that you need to wait for a certain amount of time before you do your cash out and all of that. So this is a major advantage in the Forex market. All right.
Amen.
So now, guys, this is the important aspect of it. This is the important aspect of it. The market techniques. And this is what I will be teaching you. Number 1 technique. Our number 1 technique is the technical analysis. I hope you have your pen, your paper to take down this.
Please. I don't have mine. Please, you need to get it now.
Don't worry, I'm recording too. But just that
Yes, sir. Please,
I'm recording.
please. So I would like to, because I'm inside the car.
I think I'm recording.
Yes,
All right,
sir.
so the number 1 is technical analysis. Technical analysis is the use of charts, indicators, candlesticks, support and resistance, trend lines to analyze and predict market moves and direction. The use of candlesticks, charts, trend lines, indicators, support and resistance, and other tools to predict and analyze market moves and directions. So when you use those charts, I will share my chart with you guys. I will share it with you. When you use those things you see on the chart there to analyze and predict market moves and direction, we say that you are using technical analysis. You're using technical analysis. Guys, I will show you my chart so that you see what I mean by the use of charts, candlesticks, and all of that. So let me share my chart with us. Let me share my chart with us. This is my chart. Now, this is my chart. When we use, look at what's happening here. When we use, these are candlesticks. This red one are sellers. The green ones are buyers. So when you buy, we say it is going up. Don't worry, you understand the terms, the terminologies. So the use of these candlesticks, all these candlesticks that you see, they have patterns. They have patterns. So they are for reversals. So they will alert you when the market wants to reverse. So they are reversal patterns. So we use these candlesticks. We also use this. These are moving averages. This line, this is moving average. This one is moving average. These are trend lines. This, you see this one now, I can draw another one. This is a trend line. This one you see a trend line. These are indicators or oscillators. Indicators. So when you use all of this that you can see here to predict and analyze and say this market will go up, it will come down, it will go like this, we say that you're using what? Technical analysis. So that is the use of, that is technical analysis. So I will go through the other two techniques for us. Now the other two techniques, the second one is what we call fundamental analysis. Fundamental analysis. Now, before I will go into fundamental analysis, there is something I would like to tell you about when we say we are buying and when we say we are selling. Because if you see here, you see what we call new order. This is where you go and then you place a buy or a sell. So now, we always say that we buy low and we sell high. We buy low, we sell high. Now look, we buy when the price is low. Look at buyers are now in the market, and then we sell when the price is high. Look at sellers are now in the market. Now let me use a whiteboard to explain what I mean by that. Now this is my whiteboard. Now let me draw something like this. I hope you can see my whiteboard, guys.
Yes, sir.
Okay. Now you see this point. You see this point. You see this point. Now, this is the oscillator, which you saw there, an indicator. At this point, we say this is the lowest, this is oversold. Market, when we say market is selling, it means market is going down, it's coming down. And when market is buying, it goes up. So market was selling from this point. From here, sellers are 100%. Sellers are 100% here, but buyers are 0%. Now, since sellers are 100%, they will push the price down. Will sell and sell and sell until it gets to oversold zone. This is the oversold. So when it gets to oversold zone, sellers are no more in the market. So sellers now become 0 and buyers becomes 100%.
100.
So we have full buyers here. Now the reason is we buy when price is low. When the price is low, we buy. And then you wait until after some time when the price is high, then you now sell it. That's the idea. This distance, this difference in time or period from when you bought your currency and then to when you sell it is the gain. That's the profit. That's the profit. So at this point, buyers are 100%. So when it is going up, buyers begin to drop and lose steam. Buyers begin to drop and lose steam. So from here, buyers become 0 and sellers now become 100%. Now, an example or a typical real life scenario is when you go to this Aboki or black market people that exchange dollars and you buy dollar from them. If you sell that dollar immediately, you will not make profit. But if you wait till after some time or 2 months or 3 months and you sell, you will make profit. You will make profit. So that difference in time is what we make, that's how we make our profit in the forex market. So if market does not move up, move down, move up, move down, we will not make any profit. We will not make profit. So if market remains in this height, this horizontal range, say market is ranging. Once it remains like this, we will not make profit, and we don't want that. No trader wants that. We don't want that. Okay, so that is how the forex market or the binary option market works. This is the principle. This is the basic principle behind the market. We buy low and we sell high. We buy low and we sell high. Okay, guys. Now let me go to the other techniques that we use in the forex market. Let me go to that technique. Now the second technique that we use is what we call the fundamental analysis. Fundamental analysis. Now, fundamental analysis simply means the use of news to trade. When you use news to trade, we say that you're using fundamental. Okay, so now I will take you to the sites. There are two best websites. There are other sites, but for me, there are two sites I normally use to trade the news if I want to trade forex. But if I'm trading volatility, I don't need to bother myself about the news. I don't need to bother. But if I want to trade forex, this is one of the sites, forexfactory.com. It's not supposed to be capital letter. So forexfactory.com is one of the sites. This is one of the sites that will go to trade the news. Now you see these red folders, guys. Make sure that your time is correct, your date is correct. Make sure your date, your time is correct. As you can see, this is 9:53. This is 1st of October. Now you target these red folders. So if you don't know how to trade the news, you better leave the market before the news time. Like US dollar 3 p.m. If you're trading forex and you see red folders like this by 3 p.m., make sure you've taken your profit and you've left the market, because the news is a deformation. News is a deformation. It can spike either way. It can go up, it can come down. So depending on whether it favors whether it favors US dollar. If it does not favor US dollar, it will spike up. Like if maybe you have a pair like Euro USD, because Euro is up. Euro USD. Euro is up and dollar is down. So if this news does not favor the US dollar, it will spike up. So it will just go up, prap, and then later maybe continue or obey structure. So what we normally do is that if you don't know how to trade the news, I have a strategy called the news strategy. Is in the slide. It's in this our training slide. So I will use it. You will learn it how to trade the news. So don't worry about trading the news. That's for those who want to trade forex. That's the reason is because normally the actual will come out. The reason why this actual is out is because the news time has passed. If the news time has not reached or we've not gotten to the news time, this actual will not be there. So what you normally have is the forecast and the previous. The forecast and the previous. Now let me show you. Look at it. The forecast and the previous. So what does that mean? Now if you come here now, they are saying that now before the news time, you will not see this. Before the news time, they are forecasting that previously this issue of manufacturing was 49.1%. And that they are forecasting that it will appreciate, it will go up to 50.4. So if it goes up to 50.4, that means it will favor the US dollar. Or if it falls below this, the previous rate, that's 49.1. If it falls below this, it will not favor the US dollar. Now look at what happened. When the actual now came, it was 47.8. That means it fell below this and it did not favor the US dollar. So if we know the actual, we'll know the direction that the market is going. But since we don't know the actual, there is a strategy that we use to trade the news. So this is the site that you go to and be checking your news time. When news is coming, you say, news is coming. let me protect my profit too, and then leave the market if you don't know how to trade the news. So forexfactory.com is one of the sites. Now another site that will go for is for the sentimental analysis. Sentimental, that is number 2. So number 3 strategy, which is sentimental analysis. Sentimental analysis. So the first one was technical analysis, the second one fundamental, and this third one is sentimental. Now, please mute yourself. I don't know why I'm hearing myself. Okay, so now the second website is called investing.com. Investing.com. Now, this investing.com, what I normally use it for is that what I normally use this investing.com is if I've done analysis, I want to go and check and see what people have analyzed. So what you do, you scroll down, you scroll down to where you see technical analysis. Now, this is technical analysis. You come here, you see technical analysis, you click on Forex. When you click on Forex, they will tell you that based on their own analysis, that Euro USD will have a strong buy, like to buy. And they did the analysis based on the following, that 9 moving averages out of 11, out of 12, sorry, is telling you that to buy. 8 moving averages, 8 indicators out of 8 is telling you that to buy. So therefore it is buy. So now the member sentiment, remember I told you sentimental analysis is the third one. They are looking at their member sentiment. Members in the house or in their own technical room, 55% are saying that the market Euro USD will go bullish, but 45% are saying it will go bearish, that is to sell. So now, if you visit this site and your own analysis, maybe you did your analysis and you have that your structure is telling you that the market Euro USD will buy, and you have come to see this thing, and based on this sentiment, or you have not done any technical analysis, and based on this sentiment that you see and say, oh, 55% are saying it will go bullish. When they say bullish, it means it will buy. Guys, don't worry about the terms. We will get to terms. We'll get to terms. For now, don't worry about the terms. I will teach you the terms. So now, when you base your trade, now you go and take your trade based on this member sentiment, and you now go and buy Euro USD. When you do that, we say that you are using what? Sentimental analysis. Now, if you go to GBP US dollar, it's telling you strong buy because both of them are correlated. That's what we call correlated pairs. You will see that slide. Now you go to Euro Chef, it's telling you strong sell. And that's the reason. The reason is, look at it, they say moving averages 12 is telling you that it will sell. Indicators are saying it will sell. But look at member sentiment. 60% of the members in the house are saying, 60% are saying it will buy, but 40% are saying it will sell. Now, if you take your judgment based on this, and you say, since 60% are saying it will buy, I will ignore this. I will take a buy for this Euro share. When you do that, you're trading using what we call sentimental analysis. All right, guys. So let me stop here and look at what we have in the chart. Let me look at what we have on the slide. So let's go back to the slide again. So on the slide, where am I going? Okay. So that's about technical market techniques. So we know the three techniques: technical analysis, fundamental analysis, and then sentimental analysis. Now the next thing we'll look out for is this one that you see here. The forex market comprises of the following: two types of traders. Two types of traders. The forex market is made up of two types. We have the day traders and the swing traders. This day trader you see here is broken into intraday and scalpers. Scalpers and intraday are people who trade within the day. They monitor their market. They are on the system in the morning, and they normally do this from London section down to New York section, because that's when we have high volatility in the forex market. So they'll do this from 8 a.m. in the morning and then trade maybe within the day, like 2 o'clock, 3, 4, they are out of the market. They are out of the market. Scalpers normally use the lower time frames. When we say lower time frame, we're talking about 1 minute chart, 5 minutes, 1 minute, 5 minutes, 1 minute, 5 minutes. But they will use the 15 minutes as their dominant trend direction. Now, the swing traders are people who trade from swing to swing. Now, they trade from swing to swing. They can place a trade from here and say they want to sell this trade, and then they will take their profit at this swing low. This is a swing high. So they are monitoring that it will come down to this point. Now, they do this, and then they will leave the market. They don't care how many days it will take. They don't care how many days it will take. They don't care how many days it will take before it will get down to this point. So when it takes, whether it takes 2, 3 days, 4 days, or 2 days or 5 days, as long as it gets to where they said it will reach. When you trade like that, we say you are a swing trader. We say you are a swing trader. You're trading from swing to swing, swing high to swing low to swing high. So, and these people, these kind of traders, they use the higher time frames. The higher time frames are these ones that you see here. The daily time frame. They use this one as their dominant trend to know the trend. Guys, in forex or in binary market, we don't trade against the trend. The trend is your friend. Always look out for the trend. Where is the trend going to? What is the trend? Is it in a downtrend or is it in an uptrend? If the daily time frame is telling you that the market is in a downtrend, never you trade against that trend. All you need to do, you go to the 4-hour time frame to look for bearish pattern. Bearish pattern means pattern that will make you make a sell only. Sell is because market is going down on the daily. So sell is the bearish pattern. So market is going down on the daily. So you look for bearish pattern like bearish divergence, double top, bearish flags, ABCD harmonic patterns, inverted pin bars, bearish engulfing candles. Those are bearish patterns on the 4-hour. So once you spot them on the 4-hour, you go to the 1 hour to take your entry. Guys, I will teach you how to do all of this. We have it in this slide, and it's called top-down analysis. How to do your top-down analysis. So don't worry. Don't worry. You'll get all of this when the time comes. I just want to explain what it means. So those are the two types of traders. The best trading days, guys, are Tuesdays, Wednesdays, and Thursdays. That's for Forex. For Forex market. But in binary, every day is a good day. Every day is a good day. Every day is a good day. So the reason why we say from Tuesday is because market opens on Sunday. So on Monday is still a replay of the previous week. Market is still restructuring, it's still rearranging, it's still, playing back the previous structure. So you will not have the real structure that you analyze by weekend. You will not have it. So you will not have it. So market is still restructuring. So all you need to do, you wait And the big banks are not in the market by Monday. The big bank enters the market from Tuesdays. Wednesdays and Thursdays are good. On Friday, the market is closing, so it's not good to dwell or to waste too much time in the market. It's not good to trade even on Monday. So by Friday, since the market is closing, it's not good to remain in the market. But if you see a good structure, you can just trade and then leave the market. So those are the good days or the best days to trade Forex. But in binary option, we don't select any day. We don't select. So the best trading time frame depends on the type of trader that you are. I've told you, if you are a scalper, you go to the lower time frame. If you are an intraday, you go to this time frame. If you are a swing trader, you go to this one. With time, you understand how to use this time frame and what it means. Guys, we have less than 1 minute. Use this same link. Use this same ID to log in again. When this meeting ends, use the same ID. That's my personal ID. Use it to log in again. Repeat the same ID. So the best trading currencies are the major currency pairs. The major currency pairs are Euro USD, GBP USD, USD JPY, and all those ones. USD CAD. They are the major currency pairs. They are the major pairs. So you trade for now using those ones because the movement of the others depend on them. The best trading hours or sections are the London and the New York. That's because that's when we have high volatility. From 8 a.m. till evening, around 6, 7, 8. London section start by 8. You can Google it. Google it.